Property and Casualty Exam Prep Agent. Question 1. Medical payments coverage in a personal auto policy, Part B, pays for. Option A. The insured's legal defense costs. Option B. Damage to the insured's vehicle. Option C. Reasonable medical expenses for the insured and passengers, regardless of fault. Option D. Lost wages of the other driver. The correct answer is option C. Reasonable medical expenses for the insured and passengers, regardless of fault. MedPay is a no-fault coverage that pays for medical and funeral expenses arising from an auto accident. Question 2. When a vehicle travels from one state to another, the limits of liability in the auto policy will typically, option A, drop to the state minimum of the home state. Option B, automatically adjust to meet the financial responsibility laws of the state the vehicle is in. Option C, be void, as the policy is only valid in the home state. Option D, double for the duration of the trip. The correct answer is option B, automatically adjust to meet the financial responsibility laws of the state the vehicle is in. The PAP's out-of-state coverage provision conforms the liability limits to the minimum required by the state where the accident occurs. Question 3. A loss that occurs as a direct consequence of a covered direct loss, such as lost rental income after a fire, is A, N. Option A, direct loss. Option B, indirect or consequential loss. Option C, speculative loss. Option D, excluded loss. The correct answer is option B, indirect or consequential loss. An indirect or consequential loss is the secondary financial result of a direct physical loss, the fire. Business income and fair rental value coverages are 4 indirect losses. Question 4. Which auto coverage would pay for a damaged windshield from a rock kicked up by a truck? Option A, collision coverage. Option B, other than collision, comprehensive coverage. Option C, liability coverage. Option D, medical payments coverage. The correct answer is option B, other than collision, comprehensive coverage. Other than collision, also known as comprehensive, covers glass breakage and losses caused by flying objects, falling objects, fire, theft, and contact with animals. Question 5. An insured hits a deer on the highway, causing significant front-end damage. This would be covered under option A, collision. Option B, other than collision, comprehensive. Option C, uninsured motorist. Option D, liability. The correct answer is option B, other than collision, comprehensive. Impact with an animal is specifically listed as a covered peril under other than collision, comprehensive coverage, not collision. Question 6. A building under construction can be insured using A. Option A, business owner's policy, BOP. Option B, builder's risk form. Option C, standard commercial property form. Option D, business income form. The correct answer is option B, builder's risk form. A builder's risk policy is specifically designed to cover buildings in the course of construction, including materials and equipment on site. Question 7. The method of loss valuation that deducts for wear and tear and ages. Option A, replacement cost. Option B, market value. Option C, the agreed value. Option D, actual cash value, ACV. The correct answer is option D, actual cash value, ACV. Actual cash value is calculated as replacement cost minus depreciation. It represents the item's fair market value at the time of loss. Question 8. The Equipment Breakdown Protection Coverage Form, formerly known as Boiler and Machinery Insurance, covers option A, employee dishonesty. Option B, loss due to the sudden and accidental breakdown of covered equipment. Option C, flood damage to electrical panels. Option D, normal wear and tear on manufacturing equipment. The correct answer is option B, loss due to the sudden and accidental breakdown of covered equipment. This coverage applies to the sudden and accidental physical breakdown of boilers, machinery, and electrical equipment, which standard property policies often exclude. Question 9. The primary purpose of an insurance policy is to option A, offer a guaranteed profit to the policyholder. Option B, restore the insured to their approximate financial position before the loss. Option C, eliminate the occurrence of catastrophic events. Option D, serve as a long-term investment vehicle. The correct answer is option B, restore the insured to their approximate financial position before the loss. The principle of indemnity ensures that insurance restores the insured to their pre-loss financial condition, without profiting from the loss. Question 10. A liability that is imposed by law without any regard to fault or negligences. Option A, absolute liability. Option B, vicarious liability. Option C, general liability. Option D, premises liability. The correct answer is option A, absolute liability. Absolute liability, or strict liability, applies in certain situations, such as owning dangerous wild animals or using explosives, where the activity is so inherently hazardous that fault is irrelevant. Question 11. Which of the following best describes an endorsement to an insurance policy? Option A, the original application for coverage. Option B, a written amendment that adds, deletes, or changes policy coverage. Option C, the insurer's initial offer of coverage. Option D, a statement that the policy is non-renewable. The correct answer is option B, a written amendment that adds, deletes, or changes policy coverage. An endorsement, or rider, is used to modify the standard policy form to fit the specific needs of the insured. Question 12. Which statement is correct regarding the permissive use clause in a PAP? Option A, anyone driving the insured's car is automatically a named insured. Option B, a person using the insured's car with their permission is an insured under the liability coverage. Option C, the policy only covers household family members. Option D, a mechanic test driving the car is covered as a permissive user. The correct answer is option B, a person using the insured's car with their permission is an insured under the liability coverage. Liability coverage extends to any person using your covered auto with the named insured's reasonable belief they are entitled to do so. This is permissive use. Question 13. Which of the following is an insured's duty after a property loss occurs? Option A, begin permanent repairs immediately. Option B, discard damaged property before the adjuster arrives. Option C, protect the property from further damage. Option D, refuse to submit a proof of loss. The correct answer is option C, protect the property from further damage. The insured has a duty to mitigate further damage. Failing to protect property from subsequent harm, like covering a broken window, could jeopardize coverage. Question 14. An insurer formed under the laws of a country outside the United States is called an Option A, domestic insurer. Option B, foreign insurer. Option C, alien insurer. Option D, non-admitted insurer. The correct answer is option C, alien insurer. A domestic insurer is formed in the home state, a foreign insurer in another U.S. state, and an alien insurer in a country outside the U.S. Question 15. An employer is held responsible for the negligent acts of an employee performed within the scope of their job. This legal concept is: Option A, absolute liability. Option B, contributory negligence. Option C, vicarious liability. Option D, contractual liability. The correct answer is option C, vicarious liability. Under the doctrine of respondeat superior, a vicarious liability relationship exists, making the employer legally responsible for its employees' on-the-job negligence. Question 16. An insured has a $100,000 home with an HO3 policy and a $1,000 deductible. A $700 windstorm loss occurs. How much will the insurer pay? Option A, $1,700. Option B, $700. Option C, $0. Option D, $600. The correct answer is option C, $0. The deductible is the amount the insured must pay out of pocket before coverage applies. Since the loss, $700, is less than the deductible, $1,000, the insurer pays nothing. Question 17. Which of the following businesses is generally eligible for a business owner's policy? BOP. Option A large automobile manufacturing plant. Option B, a small, family-owned bookstore. Option C, a bank. Option D, a 30-story hotel. The correct answer is option B, a small, family-owned bookstore. BOPs are designed for small to medium-sized, low-risk businesses like retail stores, offices, and small restaurants. Larger, complex risks need a commercial package policy, CPP. Question 18. A surety bond is a guarantee that, option A, the principal will perform their obligation, backed by the surety's financial strength. Option B, an insurance policy will pay a claim. Option C, an employee will not be injured on the job. Option D, stock prices will increase. The correct answer is option A, the principal will perform their obligation, backed by the surety's financial strength. A surety bond is a three-party contract, principal, obligee, surety, where the surety guarantees the principal's performance or honesty. The principal is ultimately responsible for repaying the surety. Question 19. The insurance mechanism that pools premiums from many policyholders to pay the losses of a few is known as option A, risk retention, option B, risk avoidance, option C, risk sharing, option D, self-insurance. The correct answer is option C, risk sharing. Risk sharing, or risk pooling, is the fundamental mechanism of insurance, distributing the financial risk of loss across a large group. Question 20. Which of the following best defines a pure risk? Option A situation involving the possibility of both loss and gain. Option B, a situation involving the possibility of loss or no loss. Option C, a situation involving the possibility of gain or no gain. Option D, a situation involving only market volatility. The correct answer is option B, a situation involving the possibility of loss or no loss. Pure risk exists when there is a chance of loss but no chance of financial gain. These are the only types of risks that are typically insurable, unlike speculative risks which involve a potential for profit. Question 21. An insurance contract is considered a contract of adhesion, which means, option A, both parties negotiate the terms equally. Option B, the terms are drafted by one party, the insurer, and the other party must accept or reject the contract as a whole. Option C, the value exchanged is unequal. Option D, only one party makes a promise. The correct answer is option B, the terms are drafted by one party, the insurer, and the other party must accept or reject the contract as a whole. Because the insured has no input into the policy language and must adhere to the terms written by the insurer, any ambiguous wording is generally interpreted in favor of the insured. Question 22. An insured rents a hotel room after their home is damaged by a covered fire. The cost of the hotel above their normal living expenses is covered under option A, Part A, dwelling, option B, Part B, other structures, option C, Part D, loss of use, option D, Part E, personal liability. The correct answer is option C, Part D, loss of use. The loss of use coverage, coverage D, includes additional living expenses, paying for the increase in costs to maintain a normal standard of living, such as hotel and restaurant bills. Question 23. Under the pair and set clause in a homeowner's policy, if one of a pair of valuable earrings is lost, the insurer will typically, option A, pay the full limit of the item's value, option B, pay the difference between the value of the pair and the value of the single remaining item, option C, require the insured to surrender the remaining item to the insurer, option D, pay nothing, as the loss of one is not a total loss. The correct answer is option B, pay the difference between the value of the pair and the value of the single remaining item. The insurer has the option to pay the difference in actual cash value of the property before and after the loss, or to repair or replace the property. This prevents the insured from profiting on a partial loss of asset. Question 24. An insurer's right to step into the shoes of the insured and pursue a negligent third party for damages is option A, indemnity, option B, coinsurance, option C, subrogation, option D, arbitration. The correct answer is option C, subrogation. Subrogation allows the insurer to recover the amount of a paid claim from a legally responsible third party, preventing the insured from collecting twice and helping to keep premiums down. Question 25. A contract where the insurer's obligation to pay is contingent upon an uncertain event, a loss, is known as what type of contract? Option A, commutative. Option B, dilatory. Option C, adhesion. Option D, unilateral. The correct answer is option B, alatory. An alatory contract involves an unequal exchange of value. The insured pays a small premium, and the insurer may pay a large claim, but only if a covered loss occurs.